So we'll get going. Our only order of business is the presentation of the audit. Ryan's here to talk to us about it. Ryan, the floor is yours.
I assume this is me up here.
Looks like you have a microphone too. Good.
All right, perfect.
Yay.
Sounds good. All right, well, as you mentioned, I'm going to walk us through the results of the 2021 audit. So I have passed out the full audited financial statements along with the report to members of governance, but we're going to be walking through the summarized version, the one that is titled The Presentation of the Audited Financials. Basically goes through the high points of the other documents and then some trend analysis as well. So flipping into the first page of that, where it should say audit process and opinion along the top, just for starters, a general reminder about what it is that we do during an audit, what's the purpose of an audit. An audit is essentially us coming in and obtaining your financial records and information from throughout the year and performing various procedures over this information, such as inquiries with people outside of the city and inside the city, various analytics where we develop some sort of expectation and then compare to actual results, and then lots and lots of detailed testing, doing sampling, looking at invoices, bank statements, reports from the county, etc. And based on the results of all these procedures, we then are able to express an opinion on whether or not we feel that your financial statements are accurate. So the opinion that we've given you this year is what's called an unmodified opinion, and that's the same opinion you've received in the past. That's a clean opinion. So, next page, you got that clean opinion, but we also have some information here, some required communications about how the audit went. So this is where we would let you know if there were any difficulties that we encountered during the audit, if we had any problems getting the information we needed, etc. As you can see, nothing here out of the ordinary. Everything went smoothly, no unusual transactions or strange accounting policies noted. Everything looked pretty standard from that standpoint. We do like to always point out that there's a couple estimates in the financial statements that can really swing from year to year. Those are at the bottom of this page, one of those being the net pension liability, which the state of Minnesota essentially pushes that number down to you from their statewide plan. And then also the post-employment benefit projected liability for those retirees. A lot of actuarial estimates that go into there, so it can jump around from year to year. Next page says internal controls over financial reporting across the top. Basically, as part of the audit, we also have to look at your controls and your processes and procedures in place that help you get to those numbers that are in the financial statements. And we have 3 items listed here, the same 3 that we've had in the past, and these are pretty standard with most of the cities we work with. One of these being audit adjustments, which is basically saying that we assist with some year-end journal entries to get kind of from the cash to accrual basis of accounting. I will say the number of audit adjustments that we have here is quite a bit less than most of the cities we work with, so that is a nice thing to see here. Next one that we have listed here is lack of segregation of duties. This is because based on just the number of staff that you have on hand, you're not able to fully segregate all of your accounting functions to the extent that's considered ideal. This one is extremely common. I think almost every city we work with has this finding. And then finally, financial statement preparation. This is almost always a finding whenever we as a third party prepare the city's financial statements and there's not somebody within the city who has the technical expertise to prepare that full audited financial statement packet. Okay, next slide. This one's nice and quick this year. Review of Minnesota legal compliance. Well, this year we didn't have any findings here, so that keeps this nice and clean and quick. But basically the state gives us various checklists that cover all of these areas that are listed, and we review various items for your compliance with Minnesota statutes. And we didn't come across anything this year that raised any flags, so that was good. And with that, we'll get into the numbers a little bit here. The next few slides focus on the general fund, since that's where the vast majority of your information, or vast majority of your transactions occur. This one here looks at kind of a trend analysis, really high level, 2017 through 2021, and then we have that 2021 budget on the right-hand side. Big picture here, you can see revenue came in over budget by about $239,000. Expenditures were actually under budget by just about $32,000. And then you had some transfers, that's the other uses that are shown in the bottom right table there. Those are transfers to other funds. You had some extra transfers this year to close out some old funds and some old balances from capital projects, et cetera. But with all of this, you had budgeted for a decrease in your fund balance of about $63,000. Your actual change in fund balance was an increase of about $71,000. So you ended the year with a fund balance of a little over $1.5 million in the general fund. Next page. The next 2 pages actually take that same information and we just break it down into a little bit greater detail here. So this slide focuses on the revenues, same numbers from that previous slide, just broken out into greater categories here. And then we'll have a similar slide next looking at expenditures broken down. But revenues here, we have 2020 in the blue, 2021 actual in the red, and then the 2021 budget in green. And I always like to just look at any areas where you kind of deviated from budget a little more significantly. And the only one that's really standing out here is under intergovernmental revenues. So there's revenues, actual revenues, that red bar you can see exceeded the green by about $152,000. That's mostly related to the CARES Act, ARPA dollars that came through during the year that weren't included in your budget, along with some additional airport funding as well. Next page, same layout, but looking at expenditures. This one, across the board, we really don't have anything to talk about as far as deviations from budget. It's very close to budget in just about every category here. So the only 2 things I'll point out here is just comparing to prior year numbers, you did have a bit of a drop-off in your general government expenses. Less expenses here for COVID response-related items, as well as decrease in salaries and some severance payout. And then public safety, police salaries went down a little bit from 2020 to 2021. Next page says unassigned fund balance as a percentage of the annual budget at the top. This is looking at your general fund balance in terms of a ratio where we look at the unassigned portion as a percentage of your annual budgeted expenses. So you have a kind of an unwritten policy in place where you've tried to keep this at least 55 to 60% from year to year. And you can see you've been historically over this and not much of a change here, up from 71% last year up to about 73% this year. So pretty steady, not much of a change here. And then finally, just last page for the general fund here, just a slide showing your cash balances over the past 5 years. You know, cash will jump around a little bit. This is just showing the balance at the end of each year, so it fluctuates based on the timing of payments and receipts and that sort of thing. So it's not quite as good as looking at your fund balance, but you can see that you kind of hopped back up to your normal levels here at the end of 2021, ended the year with cash of about $1,482,000 at the end of the year. Okay, with that, we'll move into your other funds. You have 2 other governmental funds that are considered to be major or more significant funds, just based on the volume of activity that runs through these. So we have your debt service fund, which actually encompasses numerous debt issuances. So there is a page in the financial statements on page 77, it says down there at the bottom, where you could see the breakout of all the individual debt issuances. Same with capital projects. There are individual capital projects that you could narrow down on if you wanted to. But looking at things a little bit bigger picture here, debt service fund, you had revenues from taxes and special assessments coming in, expenditures for principal and interest payments, some transfers in from other funds, and overall you had an increase here in your fund balance of about $18,000. Ended the year at about $891,000. Capital project funds, the majority of the activity that I saw in here this year related to the fire department purchases, and then streets and sidewalk improvements, and then also some police department purchases. Overall, you had an increase in the fund balance here of about $124,000. And next page just shows the cash for both of these categories. Not much of a change from 2020 to 2021. Okay, with that, we'll move into your proprietary funds. So these are the funds that are theoretically operating more like a business, more self-sufficiently, from charges for services and sales, kind of self-sustaining. First, we have the water fund here, another trend analysis. The graph is just focusing on operations, looking at operating revenues versus operating expenses. And then you have a little more detail down in the table at the bottom. But comparing 2021 to 2020, operating revenues were up about $50,000. Operating expenses were up also about $114,000, mostly related to repairs and maintenance and similar improvements that were made there. And with that activity and factoring in your non-operating items there, you had an overall increase in your net position of about $39,000 for the year. Next page, we've got the same layout for the sewer fund. You can see in the sewer fund, you've had, over the last few years, kind of a growth in that gap between your operating revenues and operating expenses here. So same trend this year as well. Operating revenues are up about $152,000, and your operating expenses were up about $48,000. But overall, you can see your operating income jumped from $196,000 last year up to nearly $300,000 for 2021. So with that and your non-operating activities included there as well, you had an overall increase in net position of $236,000, $235,000. And final fund, we'll take a look at the liquor fund here. So same layout as the last two slides, once again focusing on operations. The operating revenues that are shown here, this is your sales net of the cost of the sales already. So keeping that in mind, your net sales here dropped off a little bit from 2020, down about $33,000, but still much higher than the preceding years prior to 2020. Operating expenses here were up about $19,000. However, that fluctuation from 2020 to 2021 relates almost entirely to pension expense, which is a change in your net pension liability that's pushed down from the state. So there really wasn't much you could do about that. Outside of that, expenses were actually pretty comparable from 2020 to 2021. So overall, with your operating activity and after that $40,000 transfer out to the general fund, you still had an increase in your net position here of about $4,800. And the next slide looks at these three funds, just showing the cash over the past 5 years. You can see all three of them were pretty consistent with the prior year. A little bit of a drop-off in your sewer utility fund there, down to about $2,152,000 for that one, about $2.3 million for your water fund, and about $564,000 for your liquor fund. Okay, so that's all of your individual funds. Now we've got a couple slides here that look at your city as a whole, just kind of wrapping everything together and putting it on that full accrual basis of accounting where we factor in capital assets, long-term debt, etc. So we have a slide here that looks at assets, really big picture, and then a similar slide next for liabilities. You can see assets were very comparable to the prior year, not much of a change in your current assets or your infrastructure, non-current assets, etc. Next slide here looks at liabilities, and the only real significant change here is that your debt went down. You made your regularly scheduled payments on your long-term debt, and as a result, your liabilities dropped off a little bit here. But other than that, not a whole lot of fluctuation. And one final slide just showing that long-term debt, broken out between the debt that's being financed by your governmental funds, which is financed primarily by taxes and assessments, versus the debt outstanding for your business type activities being financed by the water and sewer funds. So you can see both of these had a little bit of a drop off this year. Your business type funds, water and sewer debt, ended the year at about $7 million, and your governmental funds ended the year at about $5 million. Any questions?
Brian, on the government-wide liabilities, I'm looking at the net pension that dropped about $330-ish thousand.
Yep.
Can you explain how that went down so far?
The investments of Para did very well in 2020. So I think that's basically what drives it. There's a lot of calculations that go into it, but basically they have their projected liabilities, they have their projected earnings on their investments, and then they also have all sorts of mortality predictions and things like that. But basically, when the market fluctuates, then they take that into consideration. And honestly, there's a lot of other factors that are at the actuarial level, as far as what discount rate they're using and things that are a little beyond me. So we take the numbers from the state and we incorporate them into the financials, and that's my understanding, is it's because their investments performed well.
So as we look ahead to next year's audit, we should probably be expecting to see that number quite a bit higher?
Yeah, I would think so. Yep. Yeah, it actually does always lag a year as well, because PARA's year end, they have to have time to prepare all their reports, and so there is a little bit of a lag in the information that's in your financial statements related to PARA.
All right, thank you. Any other questions for Ryan? Thank you for being here.
Yeah, thank you.
All right, with that, we will adjourn.